A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to go ahead and promo some of the things that we're going to be looking at this week as far as markets are concerned. We've got some key levels. We've also got some key markets that we're going to look at. We're going to look at gold. We're going to look at WTI crude oil, the Australian dollar, Swiss franc. We've got a trade there that's in play. It's been sort of a mixed bag for that trade. We're going to go break that one down for you as well. And then SpaceX, we do have a trade update on SpaceX that did cash in a big, big way. We're also holding some Dell shorts. We're starting to see some interesting movement in that stock. And then we're going to cover the EURUSD as well. Today is a Monday, so we always talk about the week ahead, what's coming our way. We like to be forward-thinking when it comes right down to it. It's all about how you approach the trading week as a whole. I don't care if you make $1,000 one day and then lose $2,000 the next day. That makes it very difficult to succeed in the market. So we're going to go ahead and get after it today. I think we've got a pretty good trading week, a lot of key events. We've got to really set the stage for our lineup this week. It's going to be an interesting week, no question about it. So good to see everybody out there in YouTube land. Tina Jing, always a pleasure, Tina. Good to see you. Jason Maxon, Yo Shane, Yo Jay, what's happening? Tuku, hi Coach, hey Tuku. Always an absolute pleasure to be here, guys. We've got a lot to cover, so let's go ahead and just dive right in. Let's go ahead and start with gold. I want to get right out to price action here. The monthly charts are very, very interesting. A lot of folks hate monthlies. They don't believe in them. Always know your macro levels. Always know your macro levels. If you don't learn anything else from these live streams, your macro levels, understand where they are, understand how they impact your trading and what you can do on an intraday basis. You know, just because we're trading a monthly chart or looking at a monthly chart doesn't mean we're making an investment decision. It means that we've got to know exactly where the pressure points are in this market and where the institutional traders may be jumping in and out. Now, we hear that a lot. The institutional footprints. Where are the big guys going to get in? What's going to happen? Well, let's take a look at gold. I'm going to give you a few levels right now that you need to be cognizant of, especially if you're going to be trading these on intraday bases. Number one, last month's low. That's going to be June's low. June's low is right down there, 39.42.55. So you need to dial that in exactly per your brokerage and per what that level is with regards to your data feed. But we're going right there at 42. I believe it was 42.45, something like that. Low 42.55, excuse me. So we're off and running with one mistake to start off the live stream. So that's fantastic. All right, 39.42.55. That's a hot area. Now, what can happen there is people can get stopped out immediately. Absolutely immediately. And what that really can do to price actions can send a big sweep lower. So if you're watching gold today, 39.42.55 is big. We're only about $50 away from that. That's a key zone. So have that on your radar somewhere. Understand that expect a flood of sellers to rush into the market as the longs have to cover their positions and essentially get wiped out. Be ready for that. We may place a breakout trade a little bit later in the week, breaking down that level and going over it. Spike low right there, spike high. Long-term levels can really give you short-term gains. What could happen right here? The broader picture. Think of the broader picture for gold. What could really happen? We could get a washout underneath last month's low, and then we could definitely see the market follow through all the way down to 62%. If we do get that, this void right in here, this area more than likely is going to be filled in short order. We've got a Bollinger midpoint down there, 37.32, and then also 37.12. So that 37.25 area, that's going to be my pick to click later this week. I think if we get a shot at that zone, that's a tremendous bid. A tremendous bidding opportunity. So if you're trading gold and you're interested in gold this week, a couple of levels you need to be aware of. Number one is last month's low. Have it circled, outline it on your charts. Understand that if you're holding longs intraday and we see the market trade beneath last month's low, you need to brace yourself and get ready for a big washout. Realistically, if let's say you're making decisions on a 30-minute chart and you find yourself holding longs as price breaks beneath last month's low, more than likely you're going to get wiped out. More than likely. Now, there could be bidders there looking to support this level. I don't see it. I think your next bids are going to be right around that 39.50 level, maybe even, right there. Well, your bidders right now are going to dig in at 39.50, but once they're gone, then we're going to start looking at maybe 37.23, something like that. I would be ready for this. I really would be ready for this. Could happen this week. As far as our other markets, we're going to cover a lot of markets today, but I did want to start with gold. Now, as far as what we could say, maybe in the short run, 4-hour chart is about, to begin the trading week, I would really be referencing this as opposed to maybe trading a 5 or a 15 or a 30-minute chart intraday. We can look at those as well, but it's important to understand what's happening on that 4-hour. You can see sort of that 50% zone. It's been a real mess. Right around 4,076. We've had some good trades here. We've also had some pretty choppy price action. So in my view, the market has broken to the short now. Keep a close eye on last month's low. If you wanted to place a breakout trade, You could sell beneath last month's low, maybe right there at 39.42, maybe 39.41.90, something like that, trying to get in on a big rush of liquidity to the sell side. More than likely, you're going to see those retail longs. The pressure's on when we trade beneath last month's low. The pressure will be on, and I'm curious to see if anybody holds. I think everybody's going to bail out, and there's a couple of reasons for it. Number one, you've got the U.S. dollar index that's on the march. You're up about 0.25% today. You'll remember our long-term levels here for this DXY. I made this about as easy, this type of analysis, about as easy as I possibly can because we are dealing with macro market drivers that are just screwing everything up right now. You see right now, nice big sell-off there, pull back 38%, 101.15. Now, as long as we're right in this area, I'm not ready to throw the towel in on the bearish trend. Not ready yet. This is compression, very, very tight first 2 weeks of July. Trading shouldn't surprise anybody. Dog days of summer, right? But right there, 101.15, that's the break point. That is where this market will either break to the bull or break to the bear. For me, if you're above 101.15, you're bullish. If you're below it, you're bearish. That has been sort of problematic this month because of how tight we've been. But we're ready for either a big event to send us much lower or much higher. It feels to me like we're going higher. And the reason why is the Iran war. And remember, as that dollar gets stronger, it's going to be a pretty big drag on gold. Gold looks to me like it's ready to make its next leg down. So I would definitely be ready for that. That's for sure. All right, guys, I want to start off with gold because that's sort of a big market. Everybody trades it. As far as what else are we going to cover today? A lot of stuff. And if you have any questions at all, if there's any markets you'd like me to look at, drop them in the live chat over there on YouTube, or you can drop them in the the live chat in the How to Trade community. Very, very warm here in Dillon, Montana. We actually hit not all-time highs yesterday, but the highest temperatures in like the last 5 years. It was up to about 99 degrees, 96 degrees on Saturday, 99 degrees on Sunday. Very, very hot for this far north and at this elevation. You know, Dillon, Montana is about 5,300 square feet, really up on the high plain. And for it to get that hot up here means that it was hot. So we had a sport sort of get out of the long sleeves and the ties and things, and we're probably going to be just wearing t-shirts and sandals the rest of the week until it finally decides to cool down just a little bit. Okay, I have a question here in the YouTube community. Marcin, good to see you, Marcin. It's been a while. Hi, Shane. Could you take a quick look at the EURUSD? I'm seeing a 4-hour head and shoulders, a daily double top, possibly a triple, with fundamentals also favoring the CAD. I entered the short at 161.13, risking 0.5%. All right. That's a great description. We can do all of that. That's for sure. Let me see. Swag sell. If you have time, can you analyze the Great Britain pound Japanese yen? Yeah, we got a lot really to look at. We've got some time today. I've got sort of a lineup plan, some trade ideas of my own to get out there, and some trade updates of my own to get out there. But this would be a good place to start. So we've got two pairs we're going to look at. We're going to look at the EURUSD and the Guppy. Let's go ahead. Let's get cracking and do it. This is an interactive trading experience. So if you have any questions, be sure to ask. That's part of what I'm here for, is to figure out exactly how I can best help. Okay, so the question was a 4-hour. All right, let's go with a daily. Let's see, a daily double top, possibly a triple. All right, Marcin, let's start out with the daily. Okay, yeah, good call. Now, a lot of people are going to say, okay, well, this is more of a quadruple top because of all this interaction in here. Don't worry about that. I think you called it perfectly. It's a triple top. In my view, that would be a daily triple top going back right to here. So essentially, that's the area that I'd be watching. 14th of April. Okay, so you got sort of an area right around 162.50. Key level, 162.50. So there would be probably top number one or spike number one. You could say that. This area right in here, you could say that's a top, that's a top, that's a top, that's a top. What I would be doing is counting this all pretty much as one test and failure of the same area. What is the high right there? 162.71. So this is fantastic. What we've identified right away is the resistance zone. The resistance zone is what? Quarter handles are beautiful. Learn them if you're going to trade Forex. 62.77. So we're looking at about that area between 62.75 and maybe 62.50 is being staunch topside resistance. That's fantastic. So when we're looking at the EURUSD, we're saying, okay, what's happened here? Well, we've tested these zones, and now we've failed, and the market's coming off a bit. So we're going to go to the 4-hour head and shoulders, a daily double top. So we've definitely got a triple top there, or at least a resistance zone, if you want to call it a 50 top or whatever, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You can call it a 10 top, whatever. Bottom line is that's a test and a failure, and this is a test and a failure. So I think a triple top's a pretty good way to call that. We get back off to a weekly chart and make it cleaner, but there's no reason to do that. Okay, so now on the 4 hour, you're seeing a daily, let's see, you're seeing a head and shoulders, possible head and shoulders. Okay, let's take it down. Well, I mean, for me, here's how I would be looking at it. And one of the things about chart patterns is a lot of times we get open for interpretation. If I was looking at a head and shoulders, there's a couple different ways to look at it. I would say, okay, that's a shoulder, that's a head, that's a shoulder, we broke. A lot of folks who disagree with me, they'd say that's a shoulder, that's the head, we broke. Essentially, it's the same analysis. The bottom line is we broken. So your head and shoulders right here, essentially we're saying that maybe the top is in. So if you were going to take this trade, let's go ahead and take a look at your entry points. Let's see exactly where you're at. That's good stuff. You got an exact entry. So 160.113. So let's go ahead and dial it up on our charts. 160.113. Somewhere right in there. Okay, so you took the sell. I don't hate it. I don't hate it. I think that you've got some things going for you here. This area right in here, these two spike lows that came across the board late in June, those have been taken out, and you really have a pretty nice wave count, believe it or not. So if you're looking at Elliott wave, right there, that's all garbage. There's your move. There's your 1. There's your 2. There's sort of your 3. Now we're in the bit of a 4. We're looking to make that 5. So I like that you're joining the trend. That's definitely great. We've also broken beneath the lower Bollinger Band. As far as what could we be looking at for potentially price action, what could it possibly do? Well, I mean, you got a value area down here that a lot of traders are going to be focused on. They're also going to be looking right down in here at these swing lows right down there. Those swing lows are developed right around 160.50, 160.45. So if you're taking this trade at 161, essentially your key levels are going to be something like this. You're going to be 161-ish. So you're going to be watching the game there, maybe 161 or 160 and 3/4, something like that, and maybe 160.50. That 160.50 level is interesting. If you were going to put a profit target on it, I think that's probably a pretty good one. If you were looking for more, you definitely could be looking maybe at the bottom of this market structure down here, somewhere down on 159.50 or 160 even. So I like the trade. I think it's a pretty good trade. The only thing that I would say, Marcin, that we could run into issues here. We could run into issues, and the only reason why I would say that is you've got this elongated 4-hour chart. A lot of times we just sort of creep back up in here and then trade sideways again before we continue. However, I like it. As far as the fundamentals favoring the Canadian dollar, I tend to agree with you. We're seeing about a 6% bounce in WTI crude oil, and that's because the Iran war is back on. So we're going to cover that here in just a second. So you got the Iran war on. The euro just sort of in a holding pattern against most things. We're going to look at the euro USD here in a minute. But what you could definitely say is that, yeah, you're probably on the right side of it with your fundamentals. BOC, Bank of Canada on Wednesday. We're going to talk about that in a minute as well. But other than that, I would say a pretty good trade. If you were going to look at, if you were going to potentially look at a stop loss, I imagine you're looking maybe somewhere right up in there at one of those two levels. Just be sure you pat them a little bit just in case this gets dirty. But I like it. You've recognized the trend. You're following the trend. As far as trade location, a lot of folks would say, well, you're selling the low there. You're selling the low. And I would say, no, I don't think you're selling the low. I think there's plenty of room to trade down. So good trade, Marcin. We'll go ahead and monitor this one as the week comes in. That's for sure. All right, let me see. We've got questions about gold from Amal. I will definitely look at gold here in a second. Fausto, US 30, absolutely. And the Great Britain pound, Japanese yen. Okay, we're going to go pound yen, US 30, and then I'm going to talk a little bit more about gold, and then we're going to go ahead and get on with the show. All right, Great Britain pound, Japanese yen. Very quickly. All right, bullish trend, clearly. We're all pretty much aware of that, aware of really the problems that the yen has had. One of these days I'll figure out how to use TradingView, right? We'll go right here. Let's go to a daily. Okay, Daddy likes. I like that. Let's go ahead and see exactly where our hot zones, our hot support zones are. Love this market structure. Compression, move, boom, boom, boom. Now we're just starting to mill around. I really like that because we've still got a chance maybe to get on this next wave before we move higher. So if I'm interested in making a trade, that area, that spike low, we talked Fibonacci's the other day, spike low there, spike high right here. And you can see we're sort of dangerous to the top side right now. So 216.71, somewhere right in there. That's a pretty good bid. I would consider bidding there. Right here is probably a better bid, 215.91. Right now we're printing about 217-ish. So for me, right in there, I've got a 13-day EMA, which is locked and loaded at 216. We've got 215.91, 62%, the back end of that golden zone. That's a pretty good trade. Bullish here. I'm bullish. One last thing I would say is this. Rally-based rally, right? Rally, base, rally. Now your pullback right down to that base area. That 216.71, 75 area turning out to be a pretty good demand zone. Not a bad trade if you wanted to wait for a retracement there to 216.75 and long. Not bad. If you want to be more patient, 215.91, maybe 216 flat. Not bad either. So I would be looking at those levels for the Great Britain pound, Japanese yen. US 30. Very difficult trading stocks right now. I think probably the only thing that really blows me away or really blows my hair back, what's left of it, is going to be trading the NASDAQ probably to the short side. That's what I like to do because right now it's trending. You're down about 1.73%. We could definitely find a trade there potentially to get short, maybe late day, maybe a late day short scalp, a pullback scalp, something like that. But right now for the US 30, what do we have really happening? I mean, I can outline macro levels for you all day long and give you areas to just wait on. Unfortunately, sometimes that gets really boring. Sometimes it gets really boring. So US 30, spike low there, spike high there, pullback zone. I would be looking probably at 52,000s for a weekly buy. So if we came off about another 300 points, I would say you're starting to get into that kill zone. Just be aware of last week's low right at 57,067. You probably want to buy just above that, maybe somewhere in this zone, maybe 52.1s, looking to get maybe a 25-point bounce or a 50-point bounce. I think that's a pretty good trade. What you want to do is make sure that you stop yourself out underneath last week's low, though. You don't want to get caught maybe if all of a sudden the retail longs get squeezed out of this mess. I don't think you necessarily wanted that. You're welcome, Marcine. Absolutely. Cheers. So something like that's interesting to me. That would be my levels from a broader perspective. Right this minute, I don't really see any trades on the board, at least with that type of market environment. I could run Fibonacci's here and give you maybe an area to short. I'm not interested in doing that. Let's take this right down to a 30-minute chart. Let's go on over to our 30-minute market structure here and see what we're doing. Okay, that makes life a lot easier. What do you have right here? Maybe that's a pipe top or a double pipe top or something like that. If you remember those old school chart patterns. Yeah, it's a pipe top. Okay, most of you probably haven't ever heard of a pipe top. Yeah, I just remembered that. But double top right there. You love that right on your opening bell, ding, ding. Something like this could be very nice, very juicy. 52,537 potentially could be an intraday short. I like this because you've got the 30-minute, 13-period EMA coming down right around 52,543. And you've also got this area right in here, right around 52,556. I would expect a little bit of resistance right in that zone. Right in that zone. Let's try something else. Let's go on over to the E-mini Dow futures. This will give us a better look at our TPO charts and what exactly we may be able to expect out of our volume data. Remember, exchange-based products, their volume data means a lot more than OTC markets. And there's a couple of reasons for that, but the biggest reason is that you get an opportunity to see exactly where the trades have occurred at. So right there, we've got a 38% of the U.S. session. Remember, right there, opening bell, ding, ding, swing lows developed in about the last 45 minutes. Okay, now we're starting to buy back. The market's starting to buy back. We're back into the daily value area. Point of control is way up here, way up here. So we probably would want to be net sellers up there right around 52.9. No question. The real I guess question would be the right thing to say here. My concerns are, is this a trend day or isn't it a trend day? If it's a full-blown trend day and I'm looking at it and I'm saying, okay, yeah, let's go ahead and step up and sell 38%. That's what you would do on a trend day to execute. Is it a bad scalping entry? I don't believe it's a bad one. What kind of day is it, though, really, for the US 30? It's rotational. Quarter percent. It means that no matter how big this move may have been and may have looked to you when you're trading this early U.S. session, it ain't that big. So if we want to take this trade, we've got to be smart about what we do, which means we're going to dial in our risk accordingly. Let's go right to our paper trader. Remember, I am not a financial advisor, so everything that you see right here is just sort of trades that I more than likely personally would be looking at that would be on my board. Looks like we may be trading real money, though, in the near future. We're going to talk more about that. So what do I have going here? Well, I know exactly what my level is. It's 52.99. So do I want to be at 91? Not really. Not really good enough. So let's go ahead and dial this thing up. Let's go right there. Let's go right about 95, 52.95, and see what we can get going. Now, 94 is good enough. Okay, so what are we looking to do right here? We're looking to sell. We're looking to be net sellers. What am I looking for? A take profit. We're only selling 2. They're only $5 a point, so it's not a very big market. Maybe something like this, a pull back down to 78. Let's go ahead and try something like that. Maybe an 81. Let's go ahead and let's try to make a cool $120 to open on a Monday. I think this trade is a little bit higher risk than I would like, but if we could get it right now, I think we'd be in great shape. I really do. As far as my stop loss goes, we're going to go ahead and manage this one in dynamic style. We're going to be watching closely that 1-minute chart. I want to see what price action's doing, and if we do get that immediate reaction, that immediate positive reaction that we are looking for. Of course, we set the trade down and nothing happens, right? We're going to have to move on. I'm not going to sit here and watch this all day, but we got a lot to cover. We'll be watching this trade, though. This is a possible, not a bad one. That's for sure. Fausto, thank you so much. You're welcome, Fausto. Thank you for asking. As far as gold goes, we are going to talk oil here in a second. I'll be watching that one closely. We may get it right now, huh? Here it comes, 52,771. We got some time. Now, okay, pretty good move. Okay, here we go. Now we're dancing. Let's see exactly what happens. We want to see exactly what happens after our entry. In order to do that, I'm going to dial this down to about a 1-minute chart, and we're just going to execute our trade and see exactly what happens. Okay, here it is. Our entry point's coming right to us. We want to see this area. We want to join the sell side liquidity there. Now, do I know for sure that it's there? No, I don't. It's also a Monday session. I know that I'm not going down with the ship on this trade. If it gets dicey up above this resistance zone, our intraday 38%, then I'm gone. Then I'm not hanging around. They can have the money, right? That's what we're going to do. Mondays, we don't dig big holes on Mondays. There's a big reason for that. You want to keep your morale where it needs to be. You need to be positive, rested, and ready to rock and roll Tuesday, Wednesday, Thursday. So this trade is a prima facie evidence, a premier example of what we need to do to get off on the right foot. We're looking to get in. We're looking to get out. I'm not looking for a big move. I'm not trying to join the trend. I'm not trying to get in on a huge dump, which I don't personally believe is there in the market today. But we would like to make a little bit of money. So let's see if we can start off and hit the first trade of the week and see if we can put $120 in our pocket. That wouldn't be a bad way to do business. We build. Remember, we're building. We're moving the ball forward. We're getting momentum going. That's what this is all about. Mondays are all about momentum. We're going to go through the exact psychology here in a few minutes, but this is one that I really would like to nail. It's not the strongest trade in the world. We're not going to sit around and say, oh, what a trade, smoke cigars afterwards. No. This is one of those that we're looking to see what we can get out of it. We're not getting married to this one. We're just getting in there. We're taking the money, and then we're pulling our money back into our account and looking for another opportunity. Are we going to get it? Potentially. XAUUSD. Yeah, everybody wants to see gold again. I already covered gold, but I'll do it again. Why not? All right, we're going to have to circle back around to that. We got too many things to do. USOIL, I'm going to get to that as well, I promise. Gold. So everybody wants to know about gold because gold is diving. Why is gold diving? Gold's diving because the war's back on and the U.S. dollar is getting stronger. T-bills, yields, we're going to talk about those in a minute. You can definitely see what's happening with gold. You're coming right back down to what could be a very, very serious level. So right now we're printing about 4,000. The big level you need to be watching. Last month's low, 39.42.55. You need to be probably a net seller beneath last month's low. That's where you want to be. You don't want to be in here hoping to buy down here, buying last month's low and hoping to get a bottom. That's really problematic and tough, especially when we've been bearish. We've been really trending to the bear. If you look at that monthly chart, we've been trending to the bear for the past 1, 2, 3, 4, 5. You want it, believe me, you don't want to be holding longs under there. Not because you might lose, but because that could get very ugly very quickly. And as far as your intraday price action goes, I mean, I could look at a lot of different charts for you here in gold. The biggest thing that I would be aware of is that, yes, you are trending. You're off about 3%. You're off about 3% on the day. So U.S. session has been exceedingly ugly for gold, and that's because of the war fears. So right now you're selling off big. There was sort of your compression right around 4,000. Compression, and then a break in the last hour. Now you're sort of pulling back. So what do you want to do trading-wise? Well, I mean, it's not the best time to be trading gold. This time of the session is problematic when it comes to scalping. It really is, and that's because a lot of your volume has dried up. Could we have joined the short side of this market right there, right around 4,000? Yeah, but we still took a significant draw. That draw was right up to about 4,002. So for a tight scalp, that was sort of problematic. Not a bad trade, though. Not a bad trade at all. I think 4,007 would be a better sell for you. Intraday, these are intraday trades. 4,013 is probably the best sell. That would be what your plunge-based plunge, the opposite of a rally-based rally. Plunge-based plunge, sure. Something like that. I don't know. If you want to try to join this market, you probably should join it to the short side. Don't try to pick a bottom. Not yet. Wait. But this area right in here, if you don't already have last month's lows marked on your charts, you need to mark them. Very, 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 very important for gold. That's for sure. So I hope that helps a little bit on gold. Complex market. Right now, complex market. So welcome to the dog days of summer. We're seeing an absolute lot of action that is really ugly. Very tough to get trades. This is a premier example. I mean, we are in beautiful position here. We just didn't get the follow through. We were in beautiful position up there. Just didn't get it. What was your high on this E-mini Dow? 52,784. We just didn't get it. 10 ticks off. So that's life. That's life in the fast lane. You'll find that in the summertime, getting those fills is tougher than it is usually. And that's because your liquidity and your volumes, they aren't there. They aren't there. All right, let me see what's going on with the EURUSD limbo. How low will it go? Yeah, we'll talk about the EURUSD as well. I've got that one scheduled, actually lined up. We've got a few markets that we need to get to first. All right, guys, the week ahead, here we go. On with our regularly scheduled program. Today we're going to talk about gold, US oil, and the EURUSD. We've already beaten gold with a stick. I mean, just beating a dead horse. But yeah, gold is always a big mover and shaker for us. Everybody trades it. It's by far the most heavily traded thing that we deal with here on this live stream. No question, gold. All right, the week ahead, let's go ahead and get to it. The first thing we need to talk about is the MOU is over. Strikes resume. Middle East tensions are in full force. And what we have here is just kinetic strikes going back and forth. Ceasefire disintegrates as Trump says the U.S. will reinstate the blockade of the Strait of Hormuz. Just did. And also Trump says the U.S. is going to start charging about a 20% ship of Hormuz fee. That is the reason why you see the big move here in WTI crude oil. That is it. That's the big 5%, 6% gain. It's getting worse by the minute. No question about it. This is big. This is absolutely huge. This is a big-time news deal. We'll talk a little bit about Lindsey Graham here in a minute because that's another huge news story that could have major implications as far as wars go. But that's the biggest thing you need to remember right now is that your MOU, your Memorandum of Understanding, is over. The war is back on, and quite frankly, I got a feeling that it's going to escalate in a big way, and I think the United States is going to escalate it. No question about it. No question about it. Strikes all over the Middle East from Iran against U.S. allies. I believe Bahrain got hit, Kuwait got hit, Jordan got hit. So these installations are definitely under fire. The United States supposedly over the weekend launched massive airstrikes against targets all over Iran, much of which were located in that Strait of Hormuz region, which is sort of southern Iran. We're watching closely. I think the time for deals is over. We saw a lot of folks saw this coming. Personally, I believe that the big invasion and the big things were going to happen after the U.S. election. I think it's coming now. I really do. It feels to me like Trump taco. Trump always chickens out. They're done doing that. And the United States is going to flip the switch into high gear. And we're going to see what that does to our market right now. It's really putting the heat on gold. No question about it. So that's a big one. We had a trade idea. Trump, Iran, and the Aussie-Swissy. Let's go ahead and take a look at this Aussie-Swissy trade. I'm disappointed in it. In a lot, I'm just going to be frank. That's one thing. If you're new to these live streams, I'm not going to sit here and BS you. I'm disappointed in the way this one performed, and I'm going to show you why I'm disappointed. But you could see that we had sort of our key level right there was 56.24. Really a beautiful level. Great market structure to be basing our trading decision on. Remember, we need a compelling reason to get into the market. It's got to be compelling. I need a reason to trade, and we had a pretty damn good reason to trade here. This is sort of let's just take a good look at our key level because this was a good reason to get in. You see right there, 56.26. We stepped up and sold 56.24s, and this is what we've seen. This is how price actions behaved. Right in here. Now, you may or may not have gotten that fill if you were down at 24. That high right there is 56.23.6. more than likely you would have got snapped up. Your broker probably would have filled you and snapped you up right there. If they did, it was a beautiful trade. You got decent production. Your low was down there right around 56.06, so you got about 18 pips out of it. Not really enough. Not really what we were looking to do here. So we came right back up, a little bit of tight compression there, and then we broke above 56.25. So this trade right now is down about 10 pips. If you want to hold it to the short, it's not a bad idea to hold. But right now, I mean, I'm just watching this thing grind higher and higher. I'm not too impressed at all because we are seeing gold crash. It's not a crash, but it's damn sure trending to the south, 2.60%. So we're seeing gold sell off, and you're seeing the Aussie rally despite the gold sell-off. If you would have told me that gold was selling off, this I would have said immediately, I said, okay, this Aussie Swissy's going to hit pay dirt. I expected a little bit of participation to go into the Swiss franc, safe haven. War kicks off again. I would expect a little bit there. The big sell-off in gold doesn't really surprise us. Dollars up, treasuries are up. Been a drag on gold. Right now it's the gold and bonds game for safe havens. People are either buying bonds or they're buying gold. Bonds have won since March, no question. I'm watching this one closely. I don't like the way it's panning out, though. That's me just cutting right to the chase. I don't like it. We should have already been paid off on that one, but we were looking for about 55 pips. We're still in the game. You know, if that one comes back down to break even, you might just want to cut it, or you just let it run. The choice is yours. It just depends on how you want to execute. Personally, I'm watching it closely. If we see a little bit of action up here that I don't like right at 56.50, I'm probably going to bail on it. Just the way it is. I mean, the price action has not treated us very well. This was a near miss. We should have got paid right here and didn't. And the rally, again, our face really all day long. Not real big on holding losing positions. They call that a character flaw. Not real big on ones that don't perform. I just like bailing on them. That's for sure. Packham, good to see you. Sup, Packham? Good to see you. Let me see. We got a few questions here, and then we'll get to the next trade update. It's a good one. Steven, yeah, we're definitely going to cover the Euro USD. I got it on my charts ready to go. Let me see. Angelique, good to see you, Angelique. What is the best time frame to trade the NASDAQ 100 Forex pairs for day trade and swing traders? If you're trading the NASDAQ 100, 30-minute chart, my bread and butter is the 30-minute chart U.S. session. 30-minute chart U.S. session. If you want to trade and begin trading it in the London session, feel free to do that as well. 30-minute chart's pretty good. If you want to scalp, I mean, with that NASDAQ 100, I mean, you can go as low as a minute chart or 30-second chart if you want to be that active in the market. But you're going to want to do that during the U.S. session. You're going to want to do that during the U.S. session or early U.S. session. Personally, if I was trading it right now, right this minute, I probably wouldn't go any lower than a 5-minute chart, and even that's pretty low. So my decisions would be based probably on 30-minute charts, but on a trend day like today, where the NAS is just falling out of bed, down 500 points, you probably take it down to a 5-minute chart and be just fine. That's what I would say. Alec. Hi, Shane. Good to see Alec. Welcome. I live in the EU. All right. There's lots of great things about the EU. You guys have great food over there. Fantastic food, especially when you get down to Greece, Italy. I've never been to Italy. I got to get down there. Maybe next year. We'll see. Maybe later this year. Maybe. But, man, the food over there, the pasta, the bread, I was in the Frankfurt airport, and I mean the sandwiches they had on display in the Frankfurt airport, unbelievable. I was in there eating sandwiches, having a giant stein of fresh beer. It was fantastic, and you lose weight. That's the beauty of it. You come over there, you eat the bread, you eat the pasta, you drink the beers, and you come back in great shape. You do the same thing here in the States, and it's just really tough to keep the pounds off. All right, so how do I trade the YMU 2026? MT5 does not find it in the market list. What you would have to do if you wanted to trade the E-mini Dow is you'd have to probably get a futures account, and that would be with probably a U.S.-based broker. We can go ahead and see if we got it live on our MT5. Maybe let me see, YM. Okay, YM's not there. Let's go E-mini Dow. Nope. Maybe US 30. Right there is probably what you would do. Right there, Alec. If you can see that right there, you can go to US30.U6. That's going to go ahead and be the September futures contract. It's a CFD based on the futures, but you can definitely get in there and trade it using that contract. That's for sure. Look at our Dell positions making a comeback. We're going to talk about Dell here in a second as well. So that would be what I would say, Alec. US30.U6, Dow Jones Industrial Average September contract. That's what you're going to be looking at there. I prefer futures. That's just me, but that's because I'm in the United States. You can get exactly the same things done with the CFD. And a matter of fact, I'm jealous. I would rather be trading CFDs. That's for sure. Let me see. Stephen Market, I'm long Euro USD hoping for peace. All right, that's the one exception I'm going to make for hope. We don't talk about hope on this live stream. I always say hope's for losers and children. But when we're talking about peace, yeah, I'll hope with you. I think that's one thing we can all hope for. But when it comes to your trading, if I hear about you hoping, I'm gonna rip you for that. We don't hope in this game. We know exactly what we're gonna do. We don't hope. We know what we're gonna do. We don't hope we're gonna be okay. But as far as war and peace goes, hell yes, let's all hope for peace. That sounds good to me. All right, let's see right here. Let's go ahead for another trade update. This is SpaceX. I put this one out a while ago. This one was one that I waited a long time on. Pretty good stuff. We were looking for about 565 pips. It was a fantastic trade. Let's go ahead and take a look at it. We were looking to sell 146.94s, which was right up in here somewhere. Let's see, what's that low? That low right there is 148. That low right there is 147.11. So that was our sell. Low was 148. Let me see, 148.86. So that right there was our sell. Low was 145.20. So we sold essentially on the 8th of July, and this has just been a banger. Not really much of a draw at all. Not much of a draw at all, and we came off just absolutely beautifully. So this was really good stuff. This was really good stuff for about 565 pips. I sort of went on and on and on about SpaceX and my personal beliefs on where the stock's going. It's going to 135. Right now we're trading 138.50. It's going to check out that institutional open. This was a void. Remember, we opened to the public at 150, and then we saw that void, that area, sort of that vacuum. That vacuum's being filled. Institutionals, let me rephrase. Big money traders, institutions, they got in the game at 135. Now take a look at what's happened to SpaceX over the past several weeks. Now I know folks that own the stock. I know folks that are in it, and that's great. But right there, that's a massive 3-day run up to about 225, and then you come down to reality. What happens right here? Compression. What's the common denominator? 150. 150 was the game. They defended it, bid it, till what happened? Till there's no more bidders left. That buy-side liquidity at 50 is gonzo. So now what's happening? We're trading off in a big way. We're going right to 135. My guess is we test it out again, just like this. I expect 135 to be defended. In the event that it does give way, then I'm sitting there at 125 feeling pretty good about life. We'll talk about that a little bit later in the week. We've got a big SpaceX rocket launch on Thursday, brought to my attention. I don't think we're going to cover it live because it's after the market, but maybe. We'll see how I feel Thursday. But SpaceX, Spaceship 13 they're sending in there, whatever they call it, Starship 13. They're going to launch that into space on Thursday. That's going to be a big deal. Investors are watching. Now that the money's down on SpaceX and people have bought SpaceX, they want to see SpaceX do something, and this Starship 13 is supposed to be a big deal. We're going to see if it blows up on the pad. The stock's going to go lower and lower and lower. If it's successful, then it may get a bit of a bump. Let me see, Alec. Laugh out loud, Eric. Thank you. Your story about a sandwich at the Frankfurt airport made me laugh. I'm not kidding you. I have pictures of it. You guys got big delis in the airports. I went by and I said, I'll take one of those. And then I got one of those great big, they call them Lowenbrows, the giant steins of beer that you see on TV and all the movies. That thing was awesome. So I had a Lowenbrow, I had a couple of sandwiches, and then I jumped on the plane 10 hours back to Denver, Colorado before getting the hop home. I was exhausted when I got off of that flight. Absolutely exhausted. Let me see, Amal, do you have any entries on gold? Not really. I mean, the move's sort of in. Gold, we were talking maybe about, here it is. We just talked about the retracement philosophy. There it was. There was your retracement to 38%. So that scalp's pretty much over. I would be really careful. As far as long side entries with gold, wait. We'll cover them tomorrow. Be aware of that last month's low. That's the big level for today. Be aware because that thing could really get away from you. All right, we got a couple other things to go over here today. Week 29, 2026. We're diving deeper and deeper into the trading year. It's been a lot of fun. Happy to be here. T-bill auctions for today. Tomorrow's US CPI. I'm going to have CPI live for you. Bright and early. Money never sleeps version. So I'm going to be up and rolling probably about 4 o'clock tomorrow morning here Mountain Time. That's okay. It's so darn hot during the day that I'm more than happy to get up when it's a little bit cooler outside. So US CPI live tomorrow. That's going to be a lot of fun. Wednesday, PPI, BOC interest rate decision. PPI is going to be important. don't get too carried away with it. BOC interest rate decision, we're looking for the Bank of Canada to hold rates static. We're not expecting a rate hike or a rate cut out of the BOC, so we're definitely going to be watching that one big. Also, we've got EIA crude oil inventories. We'll have our live stream about this time on Wednesday. We'll be trading it. We'll trade it live. All right, Thursday, UK GDP, U.S. retail sales. That is going to be a pretty big day in the markets. Retail sales sort of going to be what I would call definitely a key event. We're thinking recession. We don't really know yet because of the Iran war. Retail sales will drive some bids to the market, potentially some bids and asks, I suppose. UK GDP, that's going to be all about the pound. We'll be talking about the pound on Thursday as well. Friday, sort of a no donation Friday, very quiet session. Consumer Sentiment Index is the big news event, but honestly, it's going to be the Iran war, no question about it. And any other developments that we see really come our way from between now and then. Remember our Monday psychology. I already talked a lot about this, but primary objective is to trade to the positive, game plan for the week ahead, generate some momentum. Don't take a big loss today. You don't need to do that. Today's for game planning. Be ready for Tuesday, Wednesday, Thursday. News of the day, these are our T-bill yields. You can see that the 3-month T-bill auction came in at 3.760%. That's up from 3.735%. Pretty good one-week gain. And that's because the war is back on, and we believe that interest rates probably are going to get hiked. I mean, right now we're watching crude oil explode to the top side. We're going to get on crude here in just 1 second with US oil. But, I mean, it's a big move right now. It's just going crazy. You can see the 6-month T-bill went to 3.860, and that's up from 3.830. What do rising yields mean? It means that the powers that be, A, are trying to attract money with offering a higher yield to investors. And number two, the long-term lenders believe that monetary policy is going to be tighter than they think or than they maybe first thought. Back in January, those yields have just gone like this year. And a lot of it all of it has to do with the Iran war. So yields, I know nobody really cares about bonds and yields in here. We're talking about spot gold and derivatives and things, but believe me, it all fits together, and it all makes perfect sense when you lay it all side by side. Yields are up, gold's down. That's simple. All right, so here you go. U.S. oil 30-minute chart, really just a breakout day, and a lot of it it all has to do with the Strait of Hormuz being closed. Trump saber rattling, saying that he's going to take the Strait of Hormuz. Don't really know how they're going to do that, but it's interesting. We're going to be watching that as well. U.S. oil had a key level out. I believe it was a trade. I don't know about getting the actual trade update here, but that is it. So here's how the game really has unfolded for U.S. oil. I believe that last week's low is not accurate anymore. Let's go down to a weekly. Okay. Yeah, so last week's low came in at about 67.82. So let's go ahead and just move that right in there. You can see the market's just exploding to the top side. Spike high right up there. The 1st of June, so that's sort of June's high, right? And then you got the low that's developed sort of to begin or actually close June. So this is June's range. We're cutting back into that. My resistance zone is right around 78.48. So we had really what we were talking about earlier or last week with the trade idea was looking to sell about 78.25. So if you're looking at WTI crude and you want a serious level, one that's no joke, I mean, that right up in there is probably where you're going to want to do business. Really, I expect hard resistance here. Really, really robust resistance. I mean, if this market does not stop somewhere right around 78 to 78.50, then there really is trouble in paradise. And we aren't just going a little bit higher. We're going a lot higher. I mean, right now, UK oil's up over 80. U.S. oil is trending. It's absolutely trending. You're up 7.25%, 7.12%. As far as how do we trade this would be a very aggressive trade for me. If you're serious about saying, okay, Shane, I want to trade right now, you take this right down to a smaller time frame, 5-minute chart, and you're just buying pullbacks. As simple as that. So right from that spike low that developed nicely, and then you're going to be looking to work maybe off of a swing high if you can get one to develop. I mean, that realistically would be the game plan the rest of the day. This market is trending. This is a trend, no question about it. You can see that there's your 5-minute chart. It has been just a breakout really since about 8:15, since we started talking about the saber rattling. Look at the big volumes. Look at the big volume right down. Now, these are tick volumes. U.S. oil CFD's tick volume, 5.887 in 5 minutes. That's pretty good. But right here, we are definitely rolling higher, higher, and higher. I would be looking at that resistance zone. It's coming into play probably by the end of the session today. In the next 45 minutes, I could definitely see it. Let's take a look at gold futures. Now, this would be one. This is Augie Gold Futures. This would be a trade where we've been doing a lot of TPO charts. They don't really help you here. TPO charts are fantastic for flat markets. This is when we want to trade them. We want to trade them when the market's flat. So you see our point of control is down at like 73. It just doesn't matter. Maybe for tomorrow's trade or Wednesday's trade, we'll get an opportunity potentially to make a long play from down here. But as far as right now, there just isn't anything there. There just isn't anything there. I mean, the market is trending. So you've got a decision to make. What do we do? The TPO charts don't help you today. You just take them down. You say it's a trend day. Okay, I don't care. TPO's out. TPOs work when you're rotational. Take a look at what's happened today in futures. Market opens up, comes down, tests this gap, and is off to the races. Right this minute, the market is going higher, 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 and higher. What do we do? What can we do? You want to try to buy it if you can get it. The problem is getting it. Can we get a pullback? We haven't had a pullback on the 5-minute time frame since we started this live stream about an hour ago. So when I'm looking at a 5-minute chart, I'm saying, yeah, I want it. I want to trade. I want to buy. No question about it. But how do I buy? Using Fibonacci's? You're probably not going to get it. 56.25, I would love it. Back up the Brinks truck, join the trend. Absolutely. Problem is you're probably not going to get that. So what can you do? We could take it to a 1-minute chart if we want to be highly speculative. We could do it, but we could see that it's already over. Where was the pullback? Sort of there was your spike low. Remember the spike concept we went over last week at the Fibonacci workshop? Spike low, spike high. There's your pullback. That was, you still fell short. Your low right there was about 76.49. So they bought 76.50s. Okay, we're coming off a little bit now. You don't want to get involved up in that wave. So the 1 minute's not going to help you. It's not. It's a duck. You see this is sort of a uppercase P formation. Run, rotate. It's extremely bullish. Maybe we can get our 5-minute trade right now. If we can get that, we'd be in great shape. Yeah, we're not going to get it. Right there's sort of your swing low. There's your spike. We're just way down the queue. You got to wait maybe for that late day pullback. You get it. Just when you don't want to take this trade, though, is about 2:25 Eastern to 2:30 p.m. Eastern. You don't want any part of that. There's a big rush every single day in the futures market or right around that 2:30 p.m. Eastern. You don't want to trade WTI crude then because it's just chaotic. It's sort of like the stock market close. The last couple minutes are really brutal, really difficult. That's up and away. It looks like the train's missed the station, and we done missed it. So that's tough. All right, what do we got? Did we just miss it again? Again, we missed it. Damn it. Those are our sells. I mean, those are our Dow sell limits. The high, 52,790. What was our high right there? Our entry point was right there at 52.94. I mean, we missed by 4 points. Welcome to the wonderful world of horizontal levels, right? A couple things you can do right now. You could pull it because you missed it, or you could take it right up on that level. We'll put it right on the level. Let's see if we get it. But honestly, typically when we're that close twice, you go find something else to do. That's for sure. All right, a couple other things to cover here, and we're going to go ahead and call it a day. If there's any other markets you'd like to look at, be sure to throw them in there. I am going to look at the EURUSD last. We'll close with that. I know a few of you have been waiting for it. This was a big deal over the weekend. Remembering Lindsey Graham, this was a big-time senator for a long time, pretty much my entire life. The guy was in the Senate. Big hawk. He voted for war pretty much every time he had a chance to. Always voted for defense spending, was a big supporter of the Ukraine. And he was in the Ukraine. He was overseas on a fact-finding mission in the Ukraine, or whatever you want to call it, supposedly touring drone factories and whatnot, and didn't make it back. They said that he got back to the United States and died of an aortal hemorrhage, or a blown aorta, which essentially that's the widowmaker heart attack. That's when your heart actually explodes and it kills you dead on a hammer fast. But there's a lot of questions about the timeline, about the travel to and from the Ukraine. A lot going on here. Get ready, buckle up for more on that front. You're going to hear that. That will be the conspiracy of all conspiracies coming up here relatively soon. What this did do, though, this is going to put another Senate seat up for grabs. Now, there's a lot of questions about who's going to take the place of Graham. If there's going to be maybe some sort of snap election on the Republican side to get a candidate there that potentially would have to run a race against a Democratic challenger in South Carolina. It's not likely a Democrat would win. But this later this year, This is what it's all about now. It's only a 55% chance that the Republicans keep the Senate. You can see those seats. There's 5 seats up for grabs. It's going to be very, very interesting of how this all goes. 84% chance the Democrats take the House. That apparently, according to Polymarket, these prediction markets are fairly accurate when it comes to things like elections, where they've had a couple of years to price in all the information. This is interesting, and you have to go back and really think about the renewed war efforts. If the Iran war kicks off in a big, big way, do the Republicans lose the House and the Senate? If that happens, I made a video. We had a snippet the other day on one of these live streams. I put it out on our Forex Signals TV channel, and I got a lot of criticism. A lot of people, I basically said Trump's getting impeached day one. That's the truth. That will happen. There's no question about it. If the Democrats have the House of Representatives, they will move to impeach on the first session they're in there. We already know that. As far as the Senate goes, it's really hard to remove a president via impeachment. You're going to have to get a supermajority in that chamber, which means, well, what is there, 100 senators, 2 senators per state, 100 or somewhere in there. That might be a little bit off. I don't remember offhand, but I believe it's 100. So you're going to have to get like 66 votes. You're going to have to take them out with a supermajority. That's really difficult. Now, party line votes are probably going to have the votes somewhere around 50-50 in a Senate trial to remove Trump via impeachment. However, if you lose those 5 seats and the Democrats get control in there, and all of a sudden it's like a 52 average or a 53 sitting majority for the Democrats, it could be a really challenging scenario for the Trump administration moving forward. And why that matters to the markets, things like crypto. Investigations are going to come across. Insider trading, I guarantee it. The investigations will be there. The crypto, there's going to be investigations into crypto, which could lead to more bearish price action. I mean, there's no question about it when you look at something like Bitcoin. This news, not necessarily Lindsey Graham driving Bitcoin lower, but let's be real honest about what's happening here. This is not a good scene. This is not a good scene. It's not. Bitcoin's been an absolute free fall most of the year. Started rotating down in here, a bit of a bounce, and now we're really debating that 60 level. You can see we had the long-term investment idea that we had out last week, but you can definitely bet that this 60 level is huge. If it breaks 60, we're going much, much lower in Bitcoin. And that type of political environment where all of a sudden you have relentless investigation, one right after another, on crypto, on Trump coin, it's all going to be a big deal. And it's going to point to more regulation in the crypto sphere. That's not good. That's not good for crypto bulls. I'm interested to see how this one pans out. This is a big deal. All right, EURUSD. Let's go ahead and cover this one last. You can see 30-minute chart. We had a couple of bids out there. This was a really nice one back from the 9th of July. This was a pretty good one that came across very early in the session. Nice little pop. This one right here, though, reversed out. You can see you got that sell signal, and now the EURUSD is coming off. So let me see. We had a bidder in here for EURUSD. I'm long Stephen Market. I'm long EURUSD. Well, it's not a bad idea necessarily, but the problem is the war. The war is driving bids to the U.S. dollar, and it's getting a lot of traction. Yields are up. Expectations for more rate hikes or a rate hike this year are very, very high, especially with WTI crude moves. So our dynamic should probably be thought of. Our market dynamic pretty much is this. Let me put it that way. Crude oil's jumped, stocks are coming down, and the dollar's up. So when crude oil jumps because of the Strait of Hormuz, you almost have to think that's a bullish market driver for the dollar, not the other way around. Now, typically, the dollar dictates what happens in oil because oil is essentially denominated in dollars for most of the world. Well, the problem you run into is that, okay, well, if the dollar's up and oil's up, what should I do? Fall back on your technicals. Lean on your technicals. If you're trading the majors, lean on your technicals because this fundamental environment is very, very tricky. Tomorrow we have CPI. CPI is going to throw another monkey wrench into valuations across the Forex. It's going to be fascinating. So in any case, if you were trading like a 30-minute 920 EMA crossover, you probably want to be short. As far as I'm concerned, let's go ahead and back this off to maybe a 4-hour. Sort of there was your 4-hour buy that got reversed out. This is really tricky trading. We call that a weave when you have frequent crossovers. That's that weave formation. Really hard to trade. Big bounce up against this sell, but now this sell is back in business. I think it's really difficult. Let's throw some Fibonacci's on this thing. Look at this WTI crude oil. Wowzers. Look at that. Let's go over to our USOIL. Yeah, I mean, that's your level. This area right here is going to be tested. All right, let's go to EURUSD. 30-minute chart, you see the bearish price action is there. Let's back off to a macro level. Okay, there's your bull flag on the weekly. Let's go back to the monthly. This was a monthly Fibonacci sequence. Beautiful stuff. Absolutely beautiful stuff. So 113.54. So if you're long, Steven, I don't hate it. I don't hate it. Couple of things you need to watch for, though. Number one, that's a big time deal. 113.50, that's sort of that zone, that area, that support zone that's just been hit repeatedly. So be very cognizant of last month's low and this level. So this zone right here, let's go. What is that low? Low is 113.24. So right around 113.25-ish is going to be a big deal. So definitely have that marked on your charts. You don't want to get caught long if the market does break beneath that. That's sort of a natural stop out level for your trade. Now, I'm not saying stop yourself out 1 pip. Maybe watch price action when it gets to this level. And if you're going to, maybe give it a little bit of time, we might see a failed auction and a quick bounce back up above that zone. If that's the case, then maybe that would be a good reason for us to go long. If you are holding longs, though, believe me, this is big time support down here. 113.54. But when we take a look at the daily, is this level really been saturated? Are the bidders going to be there? Or are they gone? You can see we got a nice little rally right up to 114.73. Beautiful. I believe we had a buy. We had a buy signal in here at some point. I remember the low right there is 113.61. So we got another sort of proximity test, and now we're coming back down. So if you're holding, be interested at 113.55. If we break beneath that and then trade beneath last month's low, the technicals turn bearish in a hurry. They turn bearish in a hurry. So be very careful there if you're in the EURUSD. But honestly, that's about all I have to say about this pair. I know that's not probably the best analytics, but man, it is just clear cut. I don't really know how to use the parallels. You can see what I'm looking at here, though. You had a channel. There was your channel, daily channel. Broke beneath the daily channel, and now you're rocking and rolling to the downside. Be very careful if you're holding longs there. I would say probably the last call is going to be somewhere right around 113.24. I think if the market doesn't hit that and bounce immediately back up and give you some sort of close up above 113.50, then you got to really be wary of the downside of this market, guys. This is not just a potential. I mean, this breakout area, this level of support's been there for over a year. So it's a big one. I like it. It's been great to us, but horizontal support and resistance levels, if they keep knocking on the door, if the sellers keep knocking on the door, when it finally goes, it really goes. All right, everybody, that's about enough for me. I babbled on long enough. So we just had absolutely huge news day. A lot going on right now. I'm going to take a deep dive more into what we were talking about with the Iran war. There's some things that potentially could happen in short order that are going to spoil really any sort of rally, I would say, in stocks, at least for the short term. But also the dollar, probably going to send the dollar a little bit higher. Gold, probably going to send the gold a little bit lower. And USOIL is on an absolute tear. It is just running 76, 77.46. We're up about 8%. These are the kind of days that if you get too many of them in a row, it's going to be real hard for the Republicans to win an election. Real hard. Because at this rate, with the Strait of Hormuz closed, we could easily be back up at $85 and $90 crude oil by the end of the week. Right now, the markets are aggressively pricing that closure. I'm surprised. I pretty much figured everybody knew they were going to come back in and close and then shut the Strait down, and it does not look like that's the case. All right, everybody, I've gone on long enough. Remember, if you need anything at all, head on over to howtotrade.com. Send me a private message. Ask me a question. Give me a thumbs up or thumbs down. Tell me you hate my shirt or hate my hat, or you like my shirt and you like my hat, right? No, you guys say whatever you want. I believe me. The criticism's always great. It helps us get better. But if you have any questions at all, be sure to ask. That's a great place to ask. Head on over to How to Trade. Get your free subscription. Click on my picture. Send me a private message. I'll get back to you in short order. And I would like to thank everybody for tuning in today. Absolutely. Tuku, thanks, Coach. Great stream. I'm now well prepared for the week ahead. That's what it was all about, Tuku. I want you to have a fantastic trading week. Dog days of summer. Anytime it gets to be 100 degrees, 99 degrees in Dillon, Montana, you know it's summertime, and usually summertime trading's not so good. Tomorrow's going to be pretty good, though. We've got a big-time news event, CPI Live. Be sure to come on back and join us for that. That's it. That's a wrap. I got to go drink some water. I got a sore throat now, right? It's too hot. It's hot and dry. It dries you right out. All right, everybody, have a fantastic trading day, and as always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer